Okay. Yeah, you are talking about price breaking highs and lows consecutively, right?
Yes, yes.
Okay. From when I analyze, I start from monthly time frame or weekly time frame, depending on the pay I'm analyzing. Now, look at this now. You can say it's broke high, it's broke low, right? But this is actually not this one here is actually liquidity sweep. Are you getting me? This one is actually liquidity sweep, meaning that this is our strong high. We are not expecting to see this broken in the nearest future. Are you getting me?
I am. I
Hello.
am.
All right. Now, if that's the case, then this is going to be a liquidity for this high. Now, whether this high is going to be taken out, I don't know. But I'm not expecting this to be taken out. Whether this is going to be taken out, I don't know. But what I can say is that price is going to take out this liquidity. Now, on the weekly time frame, this is internal range liquidity being taken out. This is internal range liquidity being taken out. This is next target. But now, what you are seeing is this break, this break, this break, then this one to be broken again, right?
Yes, yes.
Now, once internal range liquidity is taken out, we expect a sort of reversal. Now look at this over here. When this was taken out, price was expected to come and take this liquidity out. Price was expected to take this liquidity out, then head for this. Now within this range, there are a lot of internal liquidities to be taken out, which you can see on our daily time frame. Let me mark this out. Now we have this, we have this, we have this, and we have this as the next target. Yeah. So when this was taken out, price came over here. The reason why price came all the way here was because when this was taken out, price did not come to fill the 50%. So what do they call it? The range headed for this and not this, because price hasn't filled the 50%. So now this is liquidity within 50% of that range. Price did not come for it, and this is the entire range now. So this liquidity has to be filled. Are you getting me?
Yes, I
Hello?
am. Yes, I am.
Yeah. So that was why price actually gave us something like this. And now this now becomes the strong low. This now becomes the strong low, and this is the target. Now price has to take out everything one after the other. So now look at this range. Price came for this liquidity. Price came to on this liquidity, and this was a strong low. However, price did not break this. Can you see that this was the first liquidity within the 50%?
Yes.
Yeah. So price came for it. Now that means this is the new strong low. So now within this range, this is under liquidity. Can you see that? Can you see that
Yes.
that is
Yes.
50%? Yeah. So making this our new strong low. Can you see? And this was filled. Are you getting it?
Yes. I'm getting it.
Now let's go back to the daily time frame. So these are our next targets, right? Since it's sorry, since it's our next target, and this is also the next target on the weekly time frame, right? Let me see. On the daily time frame still, if you are from this angle, that's the next target. And okay, so both will be taken out at the same time. Both will be taken out at the same time. So now, if this is a strong low and this is the weak high, if this is strong low and this is the weak high, then this has to be taken out. This has to be taken out before heading for this high. Now, the reason why this has to be taken out because there's not enough liquidity to push price to push price uh to push price above this high. Are you getting it? So definitely
Yes.
this has to be taken out. But one might actually see that it could actually be a trap because once this is broken, let me explain, let me show you. Once this is broken, some people come and set their orders here, right? Meanwhile, some people have set their orders here as well. Are you getting it?
Yes.
So this will actually be swept, and we head for that.
Okay.
So
Okay.
with
That
this sim-
means okay.
with this simple technique, actually, it should actually clear the air when you go and backtest your GU, gold. Okay, it's just EUG and gold. When you go and backtest all those pairs, you might have a little
Okay.
bit of confusion on gold though, but um if you do it carefully, you'll get it.
Okay. That means the way if on the higher time frame we're not seeing any form of liquidity on on that particular structure on the higher time frame, we just have to go down to the lower time frame to pick out our liquidity that is within 50% of that range, mark it out, and expect price to take it out.
Okay, let me explain that. The only reason why we did that was because this has already proved to be a strong low. Do you understand?
Yes, yes. The way you do it, meaning that a strong low is a low that takes out liquidity.
Yes, and the liquidity must be within the that takes out liquidity within the 50% of the range.
Yes, yes.
And
Then
and
from
that
there,
is also okay. And that thing to also consider that is that the liquidity was part of this leg, this entire leg.
yes,
Look at this one as well. The liquidity was part of this entire leg. Look at this as well. The liquidity was part of this entire leg. Can you see that?
yes.
So it must also be part. So all those conditions must actually be met.
So that means the reason for our bullish bias on EU currently is because of what we see on the weekly, where price took out a particular low on the weekly time frame, the one you marked on the weekly, that's low.
Where price, this one,
Yes.
yeah, price took it out and started taking out internal range liquidity.
Okay, that means that's that tells us our bias is bullish.
Yes.
Okay, once price begins to take out internal liquidity to the upside.
Don't forget that I first checked my monthly time frame and I saw this sweep and this internal range being taken out one after the other. It's also a
Yes.
confirmation for me.
Okay, because from here I could see a recent low on the weekly time frame got taken out with a
Which one?
body. The
This
I don't
one.
know if you can move your cursor. No, move to the left. Move to the left. The next low to the left. No, move to the right, upward.
To the right, this.
Then to the left now. This low, this particular low that is, move to the left a little bit. Just be sliding your cursor to the left a little bit. Slide again to the left. That low that you just passed.
This low.
I don't know how to mark it.
Okay,
If you check it, you see a W shaped pattern. Like
I know
that
this.
place where your
I'm not
cursor is
saying.
now. That place where your cursor is now.
Okay.
The place where your cursor was.
Yeah.
No, no. You know the low you marked. The low you marked, there is a low above that low.
This one.
Yes, then there's another low above this low that you point. Yes, that low.
This.
Yes, that low.
Okay.
Price took it out.
Okay.
Yes.
Okay. I'm getting you. Oh yeah. What's the question?
Okay, the question is when price took out this low with a body, is it that after price takes out a low, we expect that price should go and take out the respective high, or how is it being traded?
Okay. Remember, hold on. Wait, hold on. Okay, look at this now. On the monthly time frame, EU is bearish.
Okay,
Are you getting it?
yeah,
So EU has to come and take this liquidity out before continuing this bearish move.
okay,
We have this internal range already. I'm not saying it as a break of structure. You can see it as a break of structure. You can see this as break of structure if you go to it. But this is internal range to me. So
okay,
now, once since this is taken out, price has to actually come and take out this liquidity before heading for. Let me even see. I've never. Okay, we don't even have enough price data here. So price just has to clear all this before continuing the sell. Weekly time frame. Now these highs are being taken out just to clear this internal range, right?
yes,
So now we can see we are bullish right here. We took out internal
yeah,
range liquidity.
yeah,
We took out internal range. We took out internal range. Now on the what they call it on the daily time frame. Let me on the daily. Okay, on this daily time frame, this was actually taken out. I don't mark am right there. This was already taken out. This is a break of structure, and also this is not a break of structure. This is internal liquidity. This is a break of structure. This is a break of structure. This is a break of structure. I don't know if you are getting the difference. Internal liquidity is from the previous leg to the new leg.
yes. But structure is the
Break of structure is from that same leg, the eye and the previous of the same leg, the new eye, or
uh,
the same leg to the hair. So when price actually set this, price actually set by take this out.
okay.
However,
The, the reason why I'm
however,
saying because that low that I showed you, the low I showed you
yeah,
that price to, I was taking it to be a break of structure to the downside. Why is that low not a valid break of structure to you to the downside?
I if when I was explaining, I never mentioned I never mentioned break of structure because I don't use break of structures. It's just liquidity, the liquidity that is taken out and the one that is to be taken out.
Okay,
So this could be a break of structure. Yeah, this could be a break of structure. Depending on let me even see. Let me see what I can see here. Where is it? It's not even a break of structure. It's internal range, but even when the internal range was taken out, the internal range was heading for somewhere, was heading for this liquidity. And after taking out the liquidity, it has to continue taking out the highs and head for this. So that's just basically it. Just know where price is coming from, where price is going to, and you'll be fine.
Okay. 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 That means from everything, one will be able to tell fake outs in break on structure when one is able to understand liquidity very well.
Yes.
Okay.
Yeah.
Okay. Okay. Like according to the liquidity concept, it's just like price will take out internal range liquidity to external range liquidity, or how?
Yeah. Yes.
And the
Internal
internal range
internal
liquidity are
in,
those liquidity from the
internal
previous leg.
internal range liquidity to external range liquidity, and external range liquidity to internal range liquidity. So it's just
Okay.
both vice versa.
Okay. So I
And
wanted
internal
okay.
continue.
Okay, I wanted to say the internal range liquidity is the liquidity from the previous leg, just like
Yes,
what you showed on EU.
just like
What about the
this.
external range? Yes. What about
External range liquidity. Let me show you. This is external range liquidity on a daily time frame. This is external range liquidity. This is external range liquidity. So once price takes that one out, you should see another reversal to take out internal range liquidity.
okay? Okay. That means when trading, you don't look at structure majorly, you look at the liquidities.
Structure is very, very important. Well, the only thing is that majority look at structure in the way everybody look at structure is very different. Majority look
Yes.
at structure as a break of structure and co. No, I don't see structure that way. It's still liquidity and structure. They are all together.
Okay.
Liquidity will help you find out your structure.
Okay.
Yeah.
Okay. Okay.
Are you fine? Can we end it now?
Okay. Thank you very much. I'm fine. Thank you very much.
Yeah.